What the fuck is going on, guys? Back with an update video. AMC finally broke its macro on Friday. Exactly what I wanted to see. We're squeezing. This is going to be a very long video, more than likely. Anyone that's going to complain about that, I'll save you the time. AMC is about to squeeze, along with the rest of the meme basket, along with altcoins. We're about to see absolute mayhem in the market. And yeah, so let's just jump into the video, starting with the macro on SPY. Descending broadening wedge for a year, breakout, retest, reclaim the ascending triangle, break out of the ascending triangle to the upside, upside to 444, pull back to the 20 EMA, find a bounce off, and another new 52-week high. My last video I made was on Wednesday, saying that more than likely SPY would be seeing 458 before finding a rejection and a pullback. 456.50 roughly was the high, the new 52-week high, and then from there you found the rejection and a pullback. As far as this looks to me, it looks like the symmetrical equivalent was achieved here, and now we should be pulling back theoretically to 444. Again, SPY broke both of its macro patterns, the descending broadening wedge and the ascending triangle to the upside. Day 79 in a row, closing over the 200 EMA. Haven't seen the 200 EMA in almost 3 months now. Golden cross on the daily on the S&P 500 happened about 4 months ago. And since then, we've seen nothing but upside. Again, from October 2022 until present day, forming higher highs and higher lows to the upside. And this range we haven't seen since April 2022 as well. So over a year ago, we have not seen this range. Touching on SPY in all of my videos once again, because the previous two squeezes on AMC, GameStop, and the rest of the meme basket, SPY was rallying to the upside in a very similar fashion to what we're seeing here. And what I mean by that, I showed this in my last video as well, is that you pretty much have this ascending channel here, which took you to all-time highs in the S&P 500, and we have pretty much the same thing going on here, where we have this ascending channel now. It's not drawn in, and neither is this one, but I showed it in my last video. So SPY is behaving the exact same way that we saw prior to squeezing in 2021, and it's heading for all-time highs. So getting into the symmetry once again on SPY, the blue box is your middle where you have your lowest low. You have one break above the ascending triangle here to the upside to retest the macro of the wedge. Coming into the red, you break below this horizontal line at 380 on both sides. On the left, a little bit lower to retest the macro of the wedge. From there, bounce up to 418 on the dot where you find a rejection. Over here, same thing, bouncing up to 418 on the dot before finding a rejection. Come down to 380 on the dot on both sides where you find a bounce. Uptrend to 430 where you have 3 touches on it. Uptrend to 430 where you have 3 touches on it before breaking that to the upside. And then you get this cup and handle move here, which would be the equivalent to this here. And then once you break the cup and handle to the upside, next stop is 457, 458, this line here. And from there you find a rejection and a pullback to the top of the cup and handle. So that's what I'm looking for now on SPY. It looks like the top's in here for the time being. Short term looking for a pullback to 444 here to establish support before we V recovery up and find another new 52-week high. That target's going to be around 460, and more than likely this will be the end of the symmetry, this point here. So we're looking for this pullback, this bounce to 460-ish, and more than likely that will be the end of the symmetry. So again, taking this day by day, but this looks very, very good, and this SPY's heading for all-time highs, and we'll be seeing all-time highs in the relatively near future. I mentioned previously as well, there's 2 key levels of resistance left on the S&P 500. The first being this 457, 458 level, this first yellow line here, and then 470 is the next level after that, and after 470 is all-time highs. So there is not much room in between where we are right now and all-time highs on the S&P 500. So that's pretty much it for SPY. Let's jump into AMC, starting with the macro. Oh my God, what a fucking day, Friday. What a day. This move right here is what I've been waiting for. This is the macro break on AMC. Absolute fucking boom candle after hours. This looks fucking amazing. So once again, descending trend line from 2017. You have your macro fractal break here. You play out this W pattern before you actually get into the downtrend, comparably to the descending trend line that we have here from the breakdown in the flag from the June highs. So here's the start of the descending trend, your macro fractal break here, the W that you play out in sideways before breaking down to the downtrend. Again, the downtrend, you're legging down more or less one leg at a time. The green more or less being a W on both sides, the red more or less a cup, the blue come down, bounce up, come all the way down, curl up towards the end, come down, bounce up, come all the way down, curl up towards the end, before dropping to the flat portion where you have 1, 2, 3 touches on the bottom. So 1, 2, 3, you form an uptrend. That uptrend breaks you out of the triangle and a straight line into your squeeze, and we finally broke out. So 1, 2, 3 bottoms here, and we finally got the breakout after hours on Friday. Exactly what I was looking for. I mentioned more likely than not, this move would not be intraday. I said more likely than not this would be a gap up after hours or pre-market on Friday or Monday, and more likely than not on court news, and that is exactly what happened. This looks amazing. The other perspective that I show, and here it is, where I took the colored boxes off the flat portion and threw some lines. So again, macro fractal break, the W that plays out, macro fractal break, the W that plays out sideways before you get into the downtrend. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Takes you to the end of the blue. And then from there, dropping down to the flat portion where you have 1, 2, 3 touches on the bottom. Form an uptrend, break the triangle, and a straight line into your squeeze. And over here, 1, 2, 3 touches on the bottom, and finally broke the fucking triangle. I'm so happy to see this movement. We were sideways at $4 for a month. It was driving me crazy. I said more likely than not, we're just going to be flat here until we're not. And what I meant by that is we're going to be flat here until we find this gap up, and we finally got the gap on Friday. This looks great. This is it. This is it for AMC. Well, I'm going to talk about what we're expecting next with this, but I'll just continue on with the video. So here's the micro. Once again, what we're doing for the micro is zooming in on the flat portion here. So the orange, purple, and white, comparable to the orange, purple, and white. The white was blue at first, but I changed it because this candle you couldn't really see it. It was kind of blending in. So the last box I just changed it to white. So jumping into the micro now. The orange box is the beginning of the flat portion where you drop down to your first bottom. That first bottom you have chop here, and over here same thing, dropping down to the first bottom where you have some chop. From there, 3 peaks and increasing height takes you to the end of the purple. Over here same thing, 3 peaks and increasing height takes you to the end of the purple. Again, the purple is more or less a cup with a higher high on the right, and the exact same thing over here. From that point, you come down, you break below that horizontal line that I've spoken about multiple times. You break below it, bounce above it, and get your second bottom. Over here, the exact same thing, breaking below that horizontal line, bouncing above it, getting your second bottom. From the second bottom, you get into the tri-peak on both sides. You get into the tri-peak. From the third peak of the tri-peak, you come down one last time to your third bottom. Over here, same thing. Before forming a very slight uptrend, you get this pop and this pullback here, this yellow square here, comparable to this, the pop off the third bottom and the pullback here, and then sideways in this range, battling for the 20 EMA, before you get this move here, which is your breakout iteration on AMC. So this move here, this straight line and then this pullback, is what we saw on Friday. We got the first part of it. I am expecting to pull back slightly from this. It's possible there's still more upside. I'll get into that. Once again, we're tracking the micro and the macro faster. So the flat portion that played out prior to the squeeze in January 2021, from the beginning of this until your third bottom was 320 days roughly. In the current cycle, from the beginning to our third bottom, 220 days. So roughly 3 months faster on the tracking. And once again, from your third bottom until your peak was roughly 22 days in 2021. And from our third bottom, we are now on day 13. So again, 22 days, third bottom to peak. Third bottom to where we are on Friday is 13 days, and we're tracking this faster. We just broke out of the macro. This looks fucking incredible. So good. Very, very bullish. We're squeezing very soon. Once again, the daily gaps. So the flat portion of the January 2021 cycle on the left, the flat portion of the current cycle on the right. Daily chart here. I mentioned that all the gaps are the same. So the orange, you have these 3 black flags here. These gap ups in the exact same spot on both sides. Both cycles are the same. The purple, 2 gaps here coming up on the right side of the cup and over here the exact same thing. And then the last iteration in W here, 1, 2, 3 gaps down, 1, 2, 3 gaps down. The tri peak, come down from the third peak, one final gap here, which takes you to your third bottom. Over here, same thing. From the third peak, come down, one final gap, which takes you to your third bottom. From that third bottom, you get a pop and a pullback here, battling for the 20 EMA, which is where we would have been. And I said we're looking for this blue flag here. This gap up iteration is what we're looking for. More than likely, that would be happening on Friday or Monday, and it would be after hours or pre-market, obviously, because it's a gap. Gap ups don't happen intraday. So I said Friday or Monday, after hours or pre-market, looking for a gap, and more likely on news, the court news, and that's exactly what we saw. So the gaps are all identical. The movement is identical. And once again, the daily EMAs are identical. So same thing here, daily chart of both cycles. The EMAs are completely the same. Absolutely perfect on both sides. In the orange, the 20, so the 20 is in black here, the 50 is in red. The 20 is under the 50 the whole time before you break above it, come back underneath, and then break above it higher at the end of the purple. You get that wave move that I spoke about, and over here the exact same thing. The 20 is under the 50, come back underneath, and then cross higher here at the end of the purple. From there, you come back underneath the 50 again on both sides, cross it one more time in the tri-peak, as you do here, and then come underneath one more time lower, which we did here. And again, this would have been confirming where we are on the macro. From the third bottom, you bounce up, and you're battling for the 20 EMA here before you get this gap up. And over here, same thing. From your third bottom, you bounce up fighting for the 20 EMA, and we finally got the gap up. Once again, I mentioned this multiple times, the next time the 20 EMA crosses the 50 EMA to the upside on the daily, we will be squeezing or in the middle of our squeeze. And when this candle opens up, because the candle is not here yet, because this is a daily chart, when we get a daily candle here, which is probably going to open somewhere around $7 to $10, this 20 is going to be crossing the 50 to the upside. So that's exactly what we were looking for. This final cross, the 20 crosses the 50 to the upside while you're squeezing. Monday open, the 20 EMA is going to cross the 50 EMA to the upside. So this looks fucking amazing. The gaps are the same. The daily EMAs are the same. The movement's the same. The macro's perfect. SPY's perfect. Doesn't end there. Here's the RSI. The RSI is identical. January 2021 cycle on the left, current cycle on the right. All three of your bottoms, your breakout iteration here, your squeeze, and right here, all three of our bottoms, and finally in our breakout iteration, this absolute fucking boom candle here. RSI is underneath. Everything is color coded. The RSI is identical. So the orange box here, you have your first break below. So you have oversold down here, the yellow line, and then overbought up here, and the same over here. So your first break below here, and you get two breaks above in the orange. Over here, same thing, first break below, two breaks above. The purple, you get your second break below, and your third break above. The red, you get your third break below, as you do here. You find a bounce up, and then come down, get your fourth break below in the green, and same thing over here, your fourth break below in the green. Then you get your fourth and fifth pokes through the upside on both sides. You get your 4 and 5 right there. And then from there, you come into the blue where you have your fifth and final break below. You get this pop off and this pullback, comparable to this pop and pullback here. And on the movement would be comparable for the third bottom. You get this pop and pullback here, comparable to this right here, this pop and the pullback, before you get this gap up here, which would be your breakout iteration, and that is where we are now. Absolute fucking boom candle here. This looks amazing, and there is your sixth break above, as you see it here. And now theoretically we should be pulling back from this move. Not to say that there's not still more upside on the table, but we will be pulling back more than likely, and that would be this pullback here, and that is your final pullback. It's a retest. We broke the macro. We broke the macro to the upside. This is not a micro breakout. This is a macro break on AMC. And the last thing that we have to do now is retest. Once the retest confirms off of this, it's a straight line into our squeeze. So that's what we're looking for now. So the daily gaps are the same, the EMAs are the same, the RSI is the same, the movement's the same, SPY is the same, everything looks great. I touched on this multiple times. This is the past year of price action on AMC. very clearly, this is from August 2022 when the 8th dividend was dropped here, very clearly curling to the upside, very clearly curling. You can see the curvature here. I mentioned this multiple times. You have all three of your bottoms here. On the daily, all three of these bottoms are high or lows. We had this descending trend line here, and I mentioned we were going to be very flat here as support and resistance was pinching tighter and tighter, and the break out of this would coincide with the break out of our macro, and it did. This is the macro break on AMC. So now, theoretically, we should retest, and I'm not expecting to fill the gap at all. So we closed 440 on Friday. There's going to be an open gap at 440. We are not filling that gap. I'm expecting this pullback more likely than not to take us to $6. We'll take that. We'll take that day by day. I'm expecting a pullback from here. Not to say that we can't see more upside, but I am expecting a pullback to the $6 range now, and that is pretty much that. So again, the symmetry here, this is just, being very redundant that we were looking for this gap here from your third bottom. You get this pop and this pullback, comparable to this here, this pop and the pullback, battling for the 20 EMA, and looking for this gap up here. This move played out very symmetrically in January 2021, leading to the squeeze. It's a W with a tri-peak in the middle. So your right leg of the W, your left leg of the W, and a very symmetrical move on both sides. And over here, same thing. Here, the tri-peak would be the middle, your left leg of the W, your right leg of the W, and now looking for the symmetrical equivalent over here, which would pretty much be a straight line, and that's exactly what we got. Obviously, the movement isn't here yet because this is the daily chart. We won't see the actual candle until Monday open, but we finally got the gap up that we were looking for. So that movement that we saw is this iteration here, this gap up, and then you pull back for your retest, confirm your retest, and then just a straight line to your squeeze. That's what we're looking for now. So that's that. Really quickly into the tracking. So I didn't make a video Thursday or Friday. I mentioned Wednesday. I was not expecting anything crazy for the rest of the week, intraday. So just tracking on AMC. This is what I had on Thursday and Friday. I wasn't looking for anything crazy, to be honest with you. I was looking to reclaim this channel here, high fours, low fives. That's what I was looking for. So this would be your third and final bottom here, and then the channel where you break below it, and then you play out this chop below the channel before reclaiming the channel and breaking it to the upside. So Friday, I was just looking for this move here, and this move is January 15th. January 15th end of day takes you right here, and then the following week you gap up, and that's your breakout. Instead, what happened, and this is a way more than I expected, just said, fuck January 15th, we're just going to go right through the channel and straight to our breakout. So that's where we are now. We just got the entire thing after hours, the whole move up. It is possible that we still have more upside to see here. It's possible that that pullback we saw is this pullback here, and at Monday open, pre-market into open, we're going to see more upside. I would not expect to break the $12 range. If we did see more upside, $12 would probably be your top. On the daily, we have an open gap at 960 roughly. It's possible you find a rejection there. From there, you should pull back though, play out this W, your retest, and then confirm it, and then a straight line from there. But this looks very, very good. All right, so that is that. Now I want to talk about one other thing because this is pretty crazy, and I updated the other macro perspective here, which is, and I've covered this multiple times, the flat portion here, the three fractal sequence that led up to the squeeze January 2021, is actually what we're playing out here, just in a descending fashion. I've touched on this a million times. And looking at the micro on this, if everyone remembers the trend angles, the minus 42 degrees on both sides, from the top of the W iteration over your tri-peak where you find your breakout and retest here, and same thing over here from the start of the iteration over your tri-peak where you find your breakout and retest. Trend angles are minus 42 degrees on both sides, and then from low to low, from your lower low to your first low, 178 degrees versus 176. So the trend angles are the same. So here's your W, your left leg, your tri-peak, and then your right leg with a lower low. And it's this macro is still completely valid. This would be your left leg of the W, the tri-peak, and then your right leg, which is lower. From that, you bounce up, break the macro, which would have been this, break the triangle, and then you get into your retest. And the retest is more or less just a W here. And I mentioned multiple times that this was flat. This pattern that played out was flat, comparably to the current, which was descending. I said we're tracking this in descending fashion. This was completely flat. The bottom was the bottom the whole time. And then tracking this in a descending fashion here, looking at the micro on that, where this would have been your breakout, and then you would have just formed a descending W, and then your confirmation there. With this perspective, we would have already, this would have been the bounce off the retest, actually, and we'd be looking for another gap even higher. I'm leaning more towards this macro, but we're just going to have to see. We're squeezing regardless. It's just a matter of, how soon we're actually going to be squeezing. Once again, AMC and GameStop are the exact same stock. Covered this multiple times. GME is the line in the orange. AMC is the candles underneath. You get your January squeeze here, come down, get the pop off here, form the cup, and get your June squeeze, and then just following the line through. AMC and GameStop are the exact same stock. Excuse me. And so the final iteration of GME here is curling to the upside, as is AMC. I mentioned this multiple times. Both of them are curling to the upside. And GME here, the W would be the middle of the move. You have your left shelf and your right shelf looking for this straight line here. So AMC, same thing. The W would be the middle of the move, left shelf, right shelf, and looking for the straight line. AMC saw the straight line. It isn't even close to done yet. This is just the beginning. This is nothing compared to what we're going to be seeing for the next 2 weeks, in my opinion. But I am expecting GME to replicate this move, and more than likely it's going to be happening this week. I mentioned this multiple times as well. GameStop has this support meeting resistance here on Tuesday this week, and one second. So all last week, GME was testing the resistance here, actually poked through numerous times, and on Friday rejected off of that and closed below support. For the first time, actually closed below the support here. It respected the support perfectly. Friday closed below it, and then after hours reclaimed and then closed above resistance. So this looks very, very good. I am expecting GME to break this to the upside. I'm expecting 30 plus on GME this week, more than likely. I am expecting GME to replicate the move that we just saw in AMC, and more than likely that will be happening this week. As I previously mentioned, both GME and AMC will be squeezing at the exact same time, and more likely than not, that squeeze will be MOAS. So that's pretty much that. Just give me 1 second. All right, so now let's talk about Opex dates. So, for anyone who's been watching my videos for some time now, I've covered this multiple times, where both squeezes on AMC from Opex landed 7 trading days post Opex. So the initial squeeze on AMC, January 27, 2021, you had Opex on Friday, you have your weekend, you have a holiday on Monday, and then you have 1, 2, 3, 4, a weekend again, 5, 6, and 7. So the January 2021 squeeze landed 7 trading days post Opex. The June squeeze that we saw, June 2nd, 2021, you have Opex May 21st, you have your weekend, you have 1, 2, 3, 4, 5, you have your weekend, another holiday, 6 and 7. So both of these squeezes landed 7 trading days post Opex date. Now, this is not tinfoil. If you have to sit down and actually think about this. The odds of something like this happening, the odds of both peaks on AMC, January and June, landing 7 trading days post Opex, those odds are fucking out of this world astronomical. With that being said, Opex was this Friday, July 21st, 2023, Opex this Friday, and not only was it Opex, but we broke our macro. And I'm just pointing this out. I'm not giving dates. I'm just presenting you with facts and taking this from a logical standpoint. Opex was July 21st here, last Friday, and we broke our macro. So you have your weekend, 1, 2, 3, 4, 5, weekend 6, 7 trading days lands on August 1st. I'm just pointing that out. I'm expecting to squeeze very soon, and honestly, August 1st is my target right this second. So, there's no way that this can be a coincidence. Those odds of both peaks landing 7 trading days post Opex are fucking astronomical. Out of this world astronomical. Not only that, but looking at the tracking, just give me a minute. Really? All right. So this move here that we were looking for on Friday, that I was looking for, which we just said, fuck this, we're going to break out too. This move here is January 15th, and it was on a Friday. So, again, I could show this with you. I could zoom out now. January 15th was on a Friday, and this was our Friday, looking for January 15th, and then the breakout would have been on Monday. January 15th was Opex. So, January 15th was Opex, and guess what Friday was? Opex. Opex right here. So this looks really good. I mean, everything's lining up perfectly. I'm just pointing everything out, looking at this from a logical standpoint. Once again, the OBV on AMC, and just looking at this from IPO, very normal price action here. You could really tell when this became a meme play. So very normal, waves up and down, and then you get the boom in January, the boom in June, and the pullback here. And from IPO, OBV completely flat all the way through. You get the pop January, the January squeeze here. You get a pop in the OBV. You get the squeeze. You retrace, and then squeeze again in June. You get the other pop. And then from the June squeeze all the way down, OBV is completely flat. And not only is it flat, it's almost at all-time highs. So no one is selling. Through all of this bullshit, OBV is flat. It's pretty much at all-time highs. All you're seeing here, this is not people selling. This is the algorithm running us on a loop. And the loop that it's running us on is this macro here. And we finally broke our macro to the upside. So, and this would be comparable to the HVAC company, the bank of my HVAC company, Signature Bank here. OBV through all of this, relatively flat. You see all-time highs at 375. A complete fucking pump and dump here on Signature Bank. 375 all-time highs, and then 375 pretty much to fucking zero. OBV falling off a fucking cliff here. So you could really see OBV. This is what a pump and dump looks like on OBV, comparable to AMC, where through all of this fucking nonsense, all the way from 72 all the way down to $3, OBV is completely flat. Nobody is selling. We're about to squeeze again, and more likely than not, that squeeze is going to be our MOAS. Really quickly, once again, price targets. So the January squeeze, low to high to low. The squeeze came halfway in between the 2618 and 3618. Halfway in between on the January squeeze. The June squeeze, low to high to low. The squeeze came up to the 3618, pretty much on the dot is where you found your rejection in June. And running a Fibonacci extension for our current cycle from low to high to low. Your price target halfway in between the 2618 and 3618 is roughly $130 to $145. Now, anything past this, on this upcoming squeeze, anything past $130 to $145, to be very safe, anything past the 4764, anything past $200, it's very safe to say that you're in MOAS territory. So I'm just pointing that out. That is my price. My price target conservatively is $145, but I'm leaning more towards this squeeze is going to be the MOAS, and that goes for GameStop and the rest of the meme basket as well. Not only that, there's altcoins are about to take off again. Here's XRP, Ripple, overlaid on AMC. XRP actually ran before AMC here. You have the January squeeze on AMC here. XRP ran before, and then the June squeeze, here's AMC's June squeeze. XRP ran slightly before. Actually, this pop that you saw on XRP happened the week before we saw AMC. So it's not just the memes that are about to take off. Altcoins are about to take off as well. That's XRP. That's one example. Ethereum Classic is the exact same exact movement on AMC. So you're going to see Ethereum Classic take off and more than likely see all-time highs. Dogecoin, same story with Dogecoin, pretty much the same movement all around, and you're going to see upside on Dogecoin. The list goes on and on. The market's completely fake. I don't give a fuck what you tell me. You could the fundamentals, fundamentals, like, they have a place. That place is not in meme stocks. In meme stocks, fundamentals are completely irrelevant. That's the reason that this play is what it is because these companies, AMC, GameStop, Bed Bath Beyond, were so fucking shitty that when COVID happened and the lockdowns happened and Wall Street said, oh, let's just short these companies to bankruptcy, they're already not performing well financially, let's just short them to zero. And then, you know, the whole story, retail catches on, they start buying, holding, never selling. That's when this became an actual disaster. And you could see it on the stock. I mean, here's AMC, relatively normal price action here, and then just a complete shift in behavior. January squeeze, boom. June squeeze, boom. Completely different behavior on the stock here. You can tell when this became a meme play. And with that being said, the fundamentals of this don't matter anymore. This could have happened to any ticker, but retail chose certain tickers like AMC, GameStop, Bed Bath Beyond. This could have happened to any ticker. If you just have retail piling in, so you have the Fed printing money, and retail is just getting all these stimulus checks and just piling into fucking meme stocks. You know, Wall Street bets the whole story. There's a problem when they're so short on these stocks and we're just buying and holding. They're trapped. They're fucked. And you know, I covered my my theory here on the market crash and how SPX is repeating a fractal that dates back to the 1800s, like the blue, green, megaphone, bull run, blue, green, megaphone, bull run, blue, green, megaphone, bull run here. Each megaphone, 3 touches on the top and the bottom, 1, 2, 3, 1, 2, 3, breakout, retest, bull run. Megaphone here, 1, 2, 3 touches on the bottom, 1, 2, 3 touches on the top, breakout, retest, bull run. And then the last one here, the megaphone, 3 touches on the bottom, 3 touches on the top, breakout, retest, bull run. And you know, from all-time highs on S&P 500, that descending broadening wedge that took us down to 340, really, it was just a retest here of a breakout, and now heading for all-time highs. Also previously mentioned, each blue box is more or less a correction period. It's more or less a sideways correction period that you're seeing on the S&P 500. You break that to the upside, you get the megaphone and bull run. So here's the Great Crash, the Great Depression, which retraced all the way down to the previous blue box. Theoretically, this correction period here, the 2008 financial crisis, aka the Big Short, theoretically should have pulled us back to the previous blue box, and it never happened, and instead we continued rallying to the upside. It's possible that MOAS is that market-breaking event. This is pure speculation, by the way. I'm not claiming this to be like the case. This is just purely speculation. And along with that, I mentioned this previously. This is the monthly chart on SPX, by the way. There's one open gap on the monthly, all the way through, from 1800s all the way to present day. There's one open gap. It's at $20, and coincidentally, that's where the 2008 financial crisis should have taken us for a retracement, which never happened. It's possible that MOAS is your market-breaking event from all-time highs. SPX will be seeing all-time highs first. It's possible that MOAS is that market-breaking event that pulls you back to where you're supposed to be. And again, each iteration is playing out faster and faster. Oh, all right. That was a lot. We broke the macro on AMC. We're squeezing. Very long video. I covered a lot of information here. Things are about to get crazy. Expect some volatility this week. There is a possibility that the top is not in yet on AMC for this current move. So theoretically, you have pretty much 2 spots that I'm going to be looking for a rejection. And you know the candle's not. This is the daily, so the boom candle's not here yet. It will be on Monday. So we have an open gap at 976 roughly. It's possible you see more upside pre-market Monday. Open, and maybe you see upside from open to 976. If you just blast right through the gap fill at 976, it's possible you find a rejection around the $12 range, which is the historical mean on AMC. You get this gap down right here. The January squeeze pretty much rejected off this mean as well. So would not expect to break through $12, and then from there, more likely than not, we're going to be seeing a pullback to $6. Taking this day by day, I will be going live relatively soon. I probably won't be live this upcoming week, but the following week, I will be live. So that's pretty much it for the video. I'm expecting some volatility in this upcoming week. I'm expecting GameStop to see 30 plus. GameStop is about to break its macro as well. AMC just broke the macro here. GameStop is as well. And everything looks fucking amazing, guys. Seriously, like, everything looks fucking great, and we are finally there. Finally broke our macro to the upside. Expect some volatility this week. And that's pretty much it for the video. Hope everyone's pumped. I'm fucking pumped. I cannot wait for this week. And that's it, guys. Hope everyone enjoyed their weekend. Let's see some fucking craziness tomorrow. I'll catch you in the next one.